Very good afternoon, participants, and welcome all of you to this 28th Quality Cafe session on Bank Branch Audit. So, we have with us our chairman of Center for Audit Quality Committee, CA Vishal Doshi, sir, our panelist, CA Niranjan Joshi, sir, and CA AP Sansri, sir, and moderator of the session, CA Bhavi Thakkar, sir. So, over to you, Vishal, sir, to start the session with your opening remarks.
Thank you very much, Nidhi, and a very good afternoon to all the participants who have joined on this 28th Quality Cafe session on I would say, the important topic, the annual topic of the bank branch audits. And it is without fail that at the CAQ, we bring this webinar with some live case studies and discussions with the panelists so that our members are apprised of some of the latest changes that have been incorporated through the RBI circulars and notifications, as well as through the audit processes or system changes which the auditors and our fraternity needs to look into while conducting the bank branch audits. I would take this opportunity to thank our panelists Niranjan ji and Abhijit ji, as well as the moderator Bhavi ji, for accepting our invitation. And we all know that this bank branch audit is a very busy season for the speakers and sparing their time for this webinar. Well, friends, I'm very happy to share that yesterday we've also launched the updated bank branch audit Excel utility, the 2026 edition. As you are aware that the institute every year updates the guidance note on the bank branch audit. So that was released a couple of weeks back, and based on the changes that have been made in the guidance note, the Excel branch utility has also been updated. And let me tell you, friends, that we would be having our Nidhi madam who would give an overview of the bank branch audit. But this is a tool which has been prepared specifically for our brothers and sisters who would be conducting bank branch audit. And it's a very, very important Excel tool, very easy to use, and can be used for multiple purposes, like monitoring the activities that are going on at the branch audit. Though as a signing partner or proprietor, you might be in a different location, but through this file, you can monitor the status of the audits that is there of the bank branches, as well as from the documentation point of view, and definitely and more importantly the compliance with the guidance note as well as the guide on the LFAR. So all these have been incorporated in this Excel file, so which becomes like a one-stop document for all of us while we are doing the bank branch audits. Friends, coming on to the subject of the bank branch audit, as such, I would not be going too much into detail because we have excellent panelists and the moderator who would take you through the various aspects of the bank branch audit. But one thing I would like to share is that this is an audit which all of us look forward to, because it is the first, I would say, sort of a large assignment or audit which we do at the beginning of the financial year, and where a lot of importance is given to us as the branch auditors to ensure that the financial statements are that of the branch are true and fair, and because these gets consolidated at the HO level when they are preparing the branch financial statements. So like I said, the detailing would be done by the speakers, but at the same time, I would also like to request you that it is not just about the bank branch audit, but a lot of other tools and utilities which for the fraternity as CAQ we have come out with, and these are all available on the website of the Center for Audit Quality. So I would request all of you, please visit the website, download these utilities, and these are, so I would just name a few of them, like you have on the engagement letters, where there are 5 different types of engagement letters which are there, which on a single click we can generate multiple engagement letters for a listed company and unlisted company, where IFC, that is internal financial control reporting, is required. Unlisted companies where IFCs are not required for 3CA and 3CB. So there are 5 different types of templates of engagement letters that are there in that utility. We also have a utility on materiality calculation. Again, this becomes very important from a documentation point of view, also that we download and use this as well as document the materiality threshold. So once again, my thanks to all the participants who have joined in large numbers for this webinar, and thanks to the panelists and the moderator, and of course the office of the CAQ for coming together and with this webinar. And I would also request you that this Quality Cafe series is something which at the CAQ we do on a regular basis. And so just keep yourself updated, keep visiting the CAQ website, the CAQ portal of the ICI, to get the regular updates, as well as the X handle. So on Twitter, on X, we have a CAQ page. So please do follow us so that you keep get the constant regular updates from the activities that the CAQ does. So with this, once again, I welcome you and wish you a very, very happy learning. Thank you very much.
Thank you so much, sir. So now, participants, I'll just take you through the demo of the utility. So I'll just start sharing my screen. So you have to download the utility from the ICI website, CAQ page of the ICI website. So this is our homepage of Institute, Non-Standing Committees, Center for Audit Quality Committee. Here you will see the utility for bank branch audit over here, or it is also under the Tools and Utilities tab. You just click on this link, you will get a Google form. You have to fill this Google form, and thereafter when you submit it, you will get a thank you message and a link will be there. You just click on the link, a folder will be downloaded. Now I'll just directly take you to the utility. The folder will be downloaded. In the folder, you will find a small video of how to use the utility and the utility itself. So this is the utility. You have to work on the saved version of the utility, which has been saved on your desktop. So this is the cover sheet of the utility. It gives a disclaimer. You can just go through it. Next is the table of content. The table of content, it contains a table which is hyperlinked to the various sheets over here. So simply by clicking on the particular sheet, you can just navigate to the sheet. So we have the attendance sheet. Now now the branch auditor has to submit the details of attendance of his team at the end of the audit. So this sheet will help you to fill that portion. Now you can enter the name of your team member. I say AAA. From the drop down, you have to select whether he is a partner, qualified assistant, semi-qualified assistant, etc. Suppose I say he is a partner. Similarly, for the next person, suppose I say he is Ayush, and again he is a partner. Vidhi, she is a qualified assistant, and Dinesh, he is a semi-qualified assistant. So I have just filled 4 fields for you. Next, we have to fill the date of starting the audit, date of commencement of the audit. Suppose I say it's 2nd of April 2026. So you'll see that the further dates are auto-populated on the basis of this date. So you don't have to fill these sheets. These are also formula protected. Regarding the marking of attendance, you simply have to select P for the date for which the concerned partner or proprietor was present. Suppose I fill in these 2 cells as present. So you see the number of days for which the partner or the qualified assistant was present. It is auto-populated over here. This sheet will automatically calculate those number of days. Similarly, you can do for the other people also. You don't have to mark absent, as the blank cell itself represents that he is absent. So the total number of days are calculated over here. The commencement date you have to enter, the other dates are captured over here. So this is how we have to fill this sheet. Coming to the next sheet, memorandum of changes, summary of memorandum of changes. Again, this is an important sheet, and here you can just mention the summary of memorandum of changes which are to be uploaded at the conclusion of the audit with the bank. It has to be submitted. So you can mention the account number, category which you can select from the drop down. We have some categories which are stated over here: income, expenditure, assets, liabilities, etc. So accordingly you can select the category. The accounting ledger impact of debit or credit, as the case may be, you can fill over here. Non-accounting ledger impact, again you can fill here, and there is a column for your remarks or references. So this sheet can be filled by you. We have the other matter sheet, which is to be some matters which are to be dealt only by the statutory central auditors. So these are stated over here. So we have these, some matters are over here. This is not an exhaustive list, and you can always add further matters if you want at the end, towards the end of the sheet. These again will be selected. The drop down is there. You can select this from here. Now you have to decide whether the thing which is coming under the other matter, you want to include it in the audit report or not. Accordingly, you can select yes, no, or not applicable from the drop down. There is an option for reference of the other matter para also over here in the last column. So the auditors can select that also, enter that also from here. So by filling each and every detail over here, this can also be handled by the central statutory auditors. We have the next sheet is communication with those charged with governance. As you may know that there are some important observations which are to be communicated with TCWG. And in case of a bank branch audit, he can be a branch manager or someone higher in the hierarchy. So accordingly, he can mention those significant observations in detail in column B over here. Can give the reference of the working paper, date of communication. Then the next column is whether the observation has been resolved or not. Suppose we say that yes, the observation has been resolved. Then there is an option over here whether it can be given as an emphasis of matter, other matter, or in the audit modification part. And suppose the observation is not resolved, again you can select that over here. And suppose I select yes, it has to be given in the emphasis of matter paragraph. We see that the other two parts are automatically logged and they are not applicable, because yes, it can be given only at one place, either as an emphasis of matter, other matter, or audit modification. So these checks are inbuilt in this utility, which will make you to select only one of these options. In this case, so accordingly, you can just mention all the observations, significant observations with respect to which you have communicated with TCWG. And for whatever reason, yeses are coming in the sheet, at the end of the audit, the auditor can see whether it is correctly coming in the audit report or not. The next is the audit opinion sheet. Again, here we have put many balances. So by default, this is coming as an unmodified opinion. But suppose the audit opinion is modified. So in that case over here, nature of matter giving rise to the modification. Suppose we say that the financial statements are materially misstated. So here the utility will ask us to select an appropriate option from column D or E. And if we say that yes, the matter is material but not pervasive, so this will indicate that yes, you have to give a qualified opinion. And in case you select no over here and you say that the matter is material as well as pervasive, it will give an adverse opinion over here. So we can decide on the basis of what we select over here. The definitions of unmodified opinion, modified opinion, pervasive, and misstatement are also mentioned here for sake of reference. Next is the list of templates or certificates. Again, this is at the end of the audit, the branch auditor has to submit certain certificates to the branch. So we have just compiled that list. Again, this is not an exhaustive list. You can add on further certificates if you want towards the end. Then against each of the particulars, there is a compliance column for which you can select yes, no, or not applicable. And in the remarks column, you can mention any comments or remarks if you have. Next is the SA compliance sheet. So this is also a documentary, there is also a documentary compliance points over here. There are 4 matters audit acceptance letter, engagement letter, letter of communication with previous auditor, and representation letter. Accordingly, you can select compliance from here, yes, no, or not applicable, and enter your remarks or comments in the last column. Then we have a checklist of account standards on auditing. Each of the standard, there is a hyperlink which will take you to the institute's website on the entire content of the standard if you want to refer it to. From the compliance, again, you can select either yes, no, or not applicable and mention your comments in the last column. We have a dashboard. In the dashboard, again, you can enter the name of the firm. Suppose AAA, name of the bank, BC Bank, name of the branch, say Delhi. Then the zone code, circle code, branch code, the financial year. This is fixed over here because this is the utility for 2026, so 25-26. Then from the drop down, you can select whether IFCR is applicable or not. Yes or no, you can select from here. Then the audit report date. The checks are also put in over here to ensure that the audit report date should be either same or later than the date of review, which I'll explain. Date of review I'll explain in the for the next sheets. Now, for example, now this again, this dashboard will keep give you a record at what stage your work is currently. Till what stage it is completed. For example, if I go to the cash sheet, here we have indicated there are 21 checks. So if we go to the cash sheet, you see that there are 21 checks which we have mentioned from the guidance note on bank audit 2026, reference of the para number of the guidance note as well as the technical guide on LFAR is over here. So suppose for the first point, check if the balance is as per actual cash on hand is reconciled with the day book. This is a control check. You have to mention the work status of this particular check from the drop down, whether it is yet to be started, not applicable, work is in progress, query is raised, it is completed without any comments, or completed and there are no adverse comment. Accordingly, you can simply select one of the status. You can mention the working paper reference, and if there are comments, you can mention over here. Then regarding the date of preparation, suppose I say that this is 3rd of April 2026. Prepared by, we have a drop down. You fill the attendance. You can select the name from the drop down as per the attendance sheet. I suppose I say it's prepared by Dinesh. Then the date of review. Here again, checks are inbuilt to ensure that the date of review is always either the same or later than the date of preparation. So if you try to fill in 2nd April, this will not pick. So I said it's 4th of April. So this will be accepted over here. And then who has reviewed it? Again, from the drop down, you can select, say, Ayush. Now, coming back, suppose I go back to the dashboard and I see now, initially there were 21 checks and 20 were yet to be started. Now, when we fill that cash sheet, one is in work in progress. So that is auto reflected over here. And the date of review and date of preparation is also reflected here. So as you go on filling that cash sheet, all these work status will get captured automatically over here. So I'll just make a small exercise and fill it quickly. This is just for reference. Query raised. So I just filled in a few fields for you. And if I go to the dashboard, now I see that out of 21, 15 are yet to be started, which I have not filled, and the others are auto populated over here. Similarly, you have to fill all these checkpoints from here. This will navigate to the particular sheet also. Coming to the date of audit report, here also we have inbuilt a check to ensure that the date of audit report is always later than or the date of preparation or date of review, same or later than. So you will not be able to enter a date which is prior to the date of review or date of preparation. So if you try to enter, say, suppose 2nd of April, this will not be captured over here. It will give an error. Here, it is giving an error. So accordingly, you have to fill the date Now if I try to fill it as 4th of April, this will accept it here. So care has been taken that this date is also correctly filled by us. So similarly, when this entire dashboard is filled, suppose the auditor has several branches which are being audited by his staff at various places. At the end of the day, he can just have each one of them are uploading it on a common drive. At the end of the day, he can just review this dashboard and he can decide at what percentage stage of completion is the work at every branch, so that accordingly he can decide his activities for the next few days. So this will give a control of all the dashboard, entire documentation, etc. will be at one place. So this utility will be helpful in that case. Thank you, participants. Now, Vishal sir, I think we can start the session.
Yeah, you would like to introduce the...
Yes, sure.
Please.
So we have with us our speakers, CA Niranjan Joshi sir, who is a fellow chartered accountant who having about 29 years of professional experience in audit and assurance. And he also has an extensive experience in statutory audit of banks, PSUs and private sector companies. He is empaneled as a peer reviewer with the peer review board and is also imparting training to them. Also empaneled as a reviewer with the FRRB and the QRB. And he has addressed many seminars and is a trainer for DIRM and a certificate course on concurrent audit of banks. Then, as already mentioned, that sir is contributing to the guidance note on bank audit since 2013. So, welcome you, sir. CA Abhijit Samskri sir is here, who is having a 36 years of post-qualification experience and is also speaking at professional forums for over 26 years. Welcome, sir.
Thank you.
We have our moderator, CA Bhavi Thakurji, who is a fellow CA practicing since 2012. And previous to joining the firm, she has also an experience of bank operations and was working with the Development Credit Bank and also is a member of Indian Institute of Banking and Finance. She also holds various certificates and is also a contributor to the guidance note on bank audit since 2022. So welcome all of you, sir, to this Quality Cafe session. Over to you, Bhavi ma'am, to take the session forward.
Thank you so much, ma'am. Good evening, all the panelists and the participants. Today, we are here for the Quality Cafe on Bank Branch Audit. I welcome Abhijit sir and Niranjan sir as my panelists for today's discussion. I'm so glad, sir, to have you both of you on this session. Welcome, sir. Welcome, Abhijit, sir. Welcome, Niranjan, sir.
Thank you.
Sir, we will start with the Quality Cafe on Bank Branch Audit. And very first of all, I would like to pose a first question to Niranjan, sir, as my, an opening and overview about how the bank branch audit goes. And so we have always studied that planning is the base of everything. You know, whatever we start at, we go for a planning first. So, sir, my first question goes to you is what are the steps that are involved in the planning of a bank branch audit? How do the auditors perform the analytical procedures during bank branch audit? Because, sir, you know that last year also we found that there are many youngsters who are joining us on our Quality Cafe. And we have propagated this on even X, that there are so many things that we are bringing up in this session. So, sir, please give us what are the key considerations in selecting and applying such procedures for planning a bank branch audit. Over to you, sir.
Well, Bhavi, thanks for the question. And it's always good to be part of any activity of CAQ. Basically, two important reasons why it is very important. The CAQD itself has got, CA embedded into it. So obviously it's for chartered accountants that I know. But the Q in CAQ activities is very important. And I have been telling this every time, the kind of quality what we are expecting out of all the efforts of CAQ. I think it's fantastic and I must compliment CAQD, especially Vishal Doshi, Central Council member. Sir, you have been instrumental in bringing out a lot of things. and also obviously Nidhi ma'am, you have been also doing an excellent work, and we could see that in the beginning maybe, and it's a very good opening actually already through the CAQ utilities. Actually, you have run through. No doubt, I am sure that it was not enough time for you, but I think people would have got at least a good insight about what is expected out of that utility, and I'm sure most of us will be benefited, including myself and my team. I can proudly say that for last 2 years, I have not been updating my own checklist on bank branch audit, but instead trying to wait for the utility being updated according to the new or the revised guidance note, and I'm trying to use it. So as a user also, I'm one of the satisfied users, I must say that. Coming to the question, Bhavi, you have asked, I mean, it's a very interesting question, and I appreciate that a lot of youngsters are also listening. So practically, I would divide this into two. Number one, for those who are having experience of doing audit, say for more than 2 terms or 3 terms in different banks, and one for those who are actually for the first time doing it, maybe in their first year, second year, or third year. So for those who are experienced, I think they must use, apart from all the utilities, apart from the updates and guidance notes and all everything, they must use their own experience, their expertise, their team size, their tools which they use, and then they should plan the work. For youngsters, what they should do is, the best and the most important thing they should look at is how was their experience of the previous year. And based on that previous experience, they must highlight certain key areas or key aspects where they feel that, more thrust or more coverage should be given. So ideally, for the continuing auditors, my planning starts when I finish the previous year, I suggest my team to list out certain key important factors for the next year. And everybody knows, the structure is that once you get a branch audit, at least for next 3 years, is going to continue. So that's the first thing. Second important thing, don't consider this as an annual ritual. Otherwise, every time, once in a year, this assignment comes in, and if we start opening our books on 25th of March and try to issue a bill on 15th of April and wind it up, I think that's not going to be sufficient in near future. Reason? Technology. The first and foremost thing is that the way the bank is using technology to a greater extent, I think as an auditor, we also must understand that we must also have audit procedures which would encompass through the computer systems, probably using whatever best available tools with us, and that's how this planning should work. So throughout the year, one must keep on understanding about what are the new things which has come in the banking sector, maybe through the process of doing concurrent audit, or maybe doing some other assignments in the banks, or maybe enriching knowledge through understanding of books, doing courses, understanding what are the new circulars the Reserve Bank of India has issued. All that would bring us to a level whereby at least what are the recent updates, what are the current affairs which are going to impact this entire banking world, and is it going to have an implication over auditing procedures that will be done. You rightly said, Bhavi, planning is very important factor, and I always believe that planning for any audit is key to the successful completion of the audit. So if we don't plan, it's certainly a good plan to fail in an audit assignment. So our audit program or audit requirement, the way the standards on auditing suggest, starts with SQC1 and SA200 obviously, and at least the guidance note on banks issued by AASB of ICAI, the technical guide related to long form audit report, and the technical guide to IFCO-FR, if obviously the branch is scoped. I think these are certain basic documents for which throughout the year update, understanding, study, maybe a continuous training program to the team members is something which is a good plan. Also, the appendices to guidance note, especially part B, which is our topic today, bank branch audit, talks about a lot of standardized processes, audit programs, procedures, checklists. No doubt the Center for Audit Quality also picks up the same audit program, and that is linked very nicely in the checklist or the audit tool, which we call it as audit tool for Bank Audit 2026 now, which is recently launched by Center for Audit Quality. I think that is something where we should plan. We should have a team which has some members who are experienced, some members are fresh. By and large, most of the SME CA firms find it very difficult to retain the quality talent. So that is another challenge we all are facing. So having a nice training program prior to actual conduct of an audit would be very important. So some of the key words we should remember is like reading, training, preparing plan, ethical compliances, and obviously the lot of material which is available through the AASB guidance note on audit of banks 2026, technical guide on long form audit report, and technical guide on IFCO-FR as well. Also, we must look at the stages of bank audit. So planning, execution, reporting, and documentation could be 4 major stages one can plan. And as per the requirements of SQC1, they can find, properly document who is the engagement partner, which are the engagement team members, and which team member is going to be assigned which activity during the bank branch audit. So as a good auditor, the minimum important coverage would be with respect to the points which I have discussed. Also, considering the requirements of peer review, audit documentation standard SA 230 and related documentation requirements are also equally important. So permanent file and a working paper file could be planned from day one. Some of the key features of permanent audit file could be the requirements about what are the papers which are minimum. So starting with getting an appointment letter, then understanding which act under which we are appointed. Like normally in case of public sector banks, it would be the Banking Companies Acquisition and Transfer of Undertakings Act 1970 or 1980. Or in case of State Bank, maybe it would be the State Bank of India Act. So must understand, is there any specific requirement under it, or you can look at it in the guidance note. Also look at what point you are going to give an acceptance letter. Have you returned to the previous auditor and obtained an NOC? Thanks to CA, this Code of Ethics 2019 updated version. Apart from sending it through a registered post, now we have multiple options through email to phone call, etc. Also to get the NOC from the previous auditor. One must ensure that obtaining a NOC, simultaneously giving a NOC is also equally important. Then Vishal Bhai in the initial remarks talked about engagement letters. So standard formats of engagement letters are already provided by CAQ in a different utility. So one should suggest their team to make sure that an engagement letter is issued. Also, the guidance note appendix also issues gives a standard format for engagement letter in case of a bank branch audit. So that is also something which you can do. Questionnaire based on our experience or as suggested by the guidance note can be sent to the branch about what are the requirements, what documents are required, what kind of reports are required for conduct of an audit. And overall, collecting or rather compiling all the information which is required for an audit is something which we can do at the planning level. Another important factor is all this exercise is done for writing an effective report. So obviously the expectation of issuing a statutory audit report, long form audit report, maybe a IFCO-FR report if your branch is covered by the IFCO-FR requirements, and probably communication to the statutory central auditors in case of nationalized banks under SA 600 is something which would be looked into. Primarily, this is a beginning of the plan, and as and when the work progresses, and according to this audit program one defines at the beginning, each item under that audit program brings us new areas of coverage, and for each that item one can plan a small checklist, assign a team, ensure that for our team also there is sufficient maker and checker, supervision is also being done, and enough documents are collected so that tomorrow we face the peer review with sufficient paperwork. Your subsequent question was related to some analytical procedures which we normally perform, and how do we do that during the audit. As we all are aware, SA 520 talks about the analytical procedures, and this particular statutory audit in a bank branch environment certainly warrants for specific analytical procedures. Guidance note on bank audit also talks about the same, and the requirements with respect to compliance with the regulations certainly requires risk assessment or substantive procedures to be carried out. So the risk assessment SA 315 certainly gives us an understanding about the entity and the risk environment and identifying the areas where the potential risk is. And we all are aware that advances is one area which comprises roughly around 70 to 80% of advances in a normal bank branch environment is the highest risk identified with it, and we try to cover maximum portion. I remember, asking this question to a lot of participants in interactive programs that how much time one devotes in a bank branch audit for verification of advances and IRAC. And the answer easily comes is more than 60 or 70%. And that's how we can identify the risk which we identify or assess to this particular area. Apart from that, there could be more areas one could look at is especially the inter-office account or sundries or suspense or the accounts where, there are transactions which are permitted with respect to some caveat, like inoperative accounts where transactions are permitted, etc. And all this planning stage one can really do. For testing stage during the audit process, we have an excellent utility from Center for Audit Quality about determining the audit materiality. Based on that materiality threshold, one can easily identify what are the amounts we will, look for testing. Sometimes the bank also recommends a materiality, and based on that, we define what sample we are going to check. And for that sample, we use SA 520 to gather evidence for reducing of detection risk. So some kind of a substantive procedure we carry out. One of the areas, as we said, advances is the area where we take substantial interest. And in long form audit report also, 10 crores or 10% of gross advances is minimum one covers. And each auditor has a flair of understanding of what is expected out of us. So they cover 50, 60 or 70% of total advances in those substantive procedures. The entire overall review is also another procedure which is performed generally by the auditors, because this is a time-bound effort and 10-12 days are given to the auditors from say 1st of April to 12th of April or 13th of April to complete this assignment. So maybe a comparative analysis of numbers on opening or closing or maybe at a quarter end. Similarly, maybe 15 days prior to closure and maybe 8 or 10 days after the closure, a comparative of major items of income, expenditure and asset liability also would give us a good procedure to understand whether this financial information we can rely. It especially helps us in identifying the trend, that what is the trend of the branch and whether the figures are comparable in the trend. Is there any unusual fluctuation? And if yes, then probably how to mitigate that by posing questions to the management. Similarly, ratios also makes a lot of difference. By and large, we know how much is the total advances because primarily they define the scope and coverage of our audit as well as they define the fees as well. But the ratio with respect to gross NPAs, the ratio with respect to total accounts which are in different categories, or ratio with respect to credit deposits, ratio with respect to the amounts of realizations into NPA accounts, all that will substantially support the auditor in carrying out various procedures. For profit and loss also, one has to identify the interest income or the interest expenses as a major item. In long form audit report, the auditor is expected to answer based on the testing carried out for income on expenditure, especially with respect to the interest, for interest on deposits in case of an expenditure, and for interest on income in case of advances, and identifying about whether they did a sample check and there were material deviations. Nowadays, banks are also targeting a lot of non-interest income. So one may cover in their analytics probably fee-based income or commission-based income or the charges, and that would certainly be a value add for their audit teams to come to a conclusion about true and fair view. No doubt on an expenditure side, by and large, there are enough controls, but following the delegation of power, appropriate approvals from higher authorities, competent authorities, and verifying the comparatives of expenditure with respect to the previous periods also makes a very good analytical procedures. All these analytical procedures, once they are carried out, at the end, the auditor would certainly look at the results, and if there are deviations which are beyond explanation or not satisfactorily explained by the branch management, obviously they would carry it in appropriate form, either in the main audit report if it warrants a qualification in the audit report by issuing a basis of qualified opinion, or maybe just inquiring with the management, corroborating the evidence, and then satisfying themselves about the reasons why this test performance of the test was substantially higher or lower or maybe exceptional. All these procedures certainly help in carrying out what is planned as an audit in line with the requirements of all the standards. So I think that's from my side on this question.
It was a very interesting part that sir told. I would like to just summarize in one sentence that plan with clarity, act with confidence, and achieve with consistency. That is the motto of our bank branch audit, because in a short span of time, we are going to complete all these things. So Niranjan sir gave us an insight about how the planning helps us in bank branch audit. Now over to Abhijit sir. Sir, based on your experience, can you please help us to gain the knowledge on what steps should be taken by the auditors to take and ensure compliance with applicable accounting standards and regulatory guidelines during the bank branch audit? Also, sir, please also highlight some of the analytical procedures to be integrated into the bank branch audit to improve the effectiveness without compromising the regulatory compliances. Abhijit sir, over to you.
So your question is in three parts. First is compliance with the standards of auditing
Yes,
and accounting standards. Second is compliance with various laws and regulations. And the third is what analytical procedures we will take or we will conduct for audit effectiveness and efficiency. While Niranjan answered most of the issues relating to analytics, first is let me take on standards of auditing and accounting standards. Firstly, which standards of auditing and which accounting standards are actually applicable? First is, do we know them? It's when I sign my audit report, I say I've conducted my audit in accordance with the standards of auditing, and I've also adhered to the code of ethics. And one of the most critical part of adherence to the code of ethics is competency. So knowledge of these standards, knowledge of the methodology in which I conduct the audit is essential. So again, your SA 250s on laws and regulations, again, we have the no-clear provision. So do I know which laws and regulations are applicable? So first is knowing which law, which act is applicable. And second, what are the requirements under that act which are applicable? So in the planning stage, it's the key is to actually do your homework on what checks we will need to conduct at various points of time. So a thing with well begun is half done. So when you're even starting the bank branch audit, not even having entered the branch, all the issues about the standards have to be known. And this is where the audit utility checklist can be a great help. Apart from this checklist, you have the guidance note, but even a simpler, the Western India Regional Council brings out a booklet of articles on bank branch audit every year. So that could be a great help for all the professionals working on that. The various changes in the RBI circulars over the year, and every month in the newsletter, the various changes which are there are put forward. So that's a monthly updation of RBI circulars which is coming out. And the key is all the circulars which are issued on 28 November 2025 are this year. I think a lot of relevant circulars which one needs to go about. Now, as far as analytical procedures are concerned, the thing is there is always a cause and effect in any relationship. So what are the analytics am I doing? Am I doing a ratio analysis? Am I doing a trend analysis? Am I looking at what deviation, something over 20% which is there? Am I looking at concentration? Am I looking at the large advances or the top deposit concentration? Am I looking at suspicious transactions over a threshold? Am I looking at cash transactions? Am I deep diving into the high, medium, low category accounts? So I'm looking into the transactions in high, medium accounts. Am I looking at quick mortality, infant mortality cases? Am I looking at accounts which have been upgraded in the last few days of the year? Am I looking at ad hoc TODs given for more or 2-3 days in a time? Am I looking at deviations in the audited financials and the stock statements? So any adverse debt equity ratio, any cases of siphoning of funds, willful defaults or fund diversion. So cases of underinsurance, cases of delays in receipt of data. And again, it will be, the key is having a look at the exception reports, knowing what are exceptions report and what are the exceptions in the exception report, and the tracking of the 42 signals as mandated by RBI in the 7th May 2015 circular as early warning signals or red flag account, and how the movement from an EWS to an RFA goes about. Any restructured cases, any OTS cases, any compromise cases, any of the normal write-offs or technical write-offs. So these would be the data I would take and go in that in a bit of depth to achieve my efficiency and achieve audit effectiveness. I would be aware of the fact that this would be at a max a 10-day work assignment. So I need to go out firing on all cylinders from day one. I need to be very clear on what I need to do, how I need to do, to what extent I need to do, and just have making use of this utility, or maybe having some template of my own, is what is the data which I have asked for, what is the data I have got, what is the data which is pending. If the data is not coming on time, how do I escalate? When you have said is those charged with governance or the management, whom do I escalate to? So if you don't get the data required for in 2 or 3 days, escalate it to the regional head, escalate it to the zonal head, bring it to the attention of the central statutory auditors. If you have not received all the information and explanations which the best of your knowledge and belief are necessary for the purposes of audit, whether it would invite a disclaimer. Obviously, in the LFAR, there could be a lot of cases where the data would not be received. Data would not be received on time. Incomplete data would be received. If the data received is incomplete, the responses would not be complete. So a lot of those issues we need to basically take stock, and what would be the impact, whether it would be pervasive or whether it would just entail a minor qualification, is what will need to be considered overall when we eventually finalize our opinion. One, the audit report opinion in the main audit report. The second is about the LFAR, mindful of the fact that in most of the cases of the LFAR, we are not there in the branch for 360 days of the year, which we are supposed to comment on the systems and procedures. So how could I really comment on the systems and procedures when I was just not there in the branch? So it's all by the systems and procedures which I observe in the 10 or 15 days that I've been there, maybe just 5 days of the year and maybe 10 days of the next year, or I've gone through various reports of the internal auditors, again, then reliance of the reports of the concurrent auditors or the previous LFAR, or discussions with the management, the MRLs which I take. MRL may not be a very strong evidence. So how do I factor in my judgment and conclusion considering the overall audit skepticism? That's the key, and that's a skill which an experienced auditor will have to bring out while signing the bank branch audit.
So, sir, actually, that is the skill that our ICAI produces, chartered accountants who are really skillful. In 5 days, they do all the audits and the questions of the LFAR being answered. Sir, whatever you said is very true about the early warning systems, the red flags. We have to comply with so many things when we are doing an audit. And that's the reason that this audit becomes a tough challenge, even for all the chartered accountants' experience. But yes, definitely the experienced chartered accountants go for a long way. Now, my next question to Niranjan, sir. Sir, the engagement team holds discussion to gain a better understanding of the bank and its environment, including internal controls, and to assess the risk of material mismanagement in the financial statements. Sir, how should these discussions be properly documented for the future reference? Sir, please give your insight on this.
Obviously, again, SQC1 is the key to this particular thing, and obviously, all of us by now are well versed with what is required of out of SQC1. So, starting from documenting the requirements of SQC1, one would identify who is the engagement partner, which are the team members who are part of the engagement team, and identifying those team members based on their experience, based on their qualification, and based on their expertise dealing in this kind of a bank audit environment. It's something which is the first and foremost thing. Another important factor is, as per the audit program, ensure that the first thing you give is time to your team for giving them a clear idea about what is expected out of this entire exercise. So, in continuation with my earlier opening remark, the entire audit plan, once it's done with the main team members, I think the auditor should engage all the team members at one point and then have an interaction about what are the key considerations for, or rather what are the key takeaways for this particular assignment. And the most important factor out of this in today's world is documentation. No doubt, bank branch auditors were till now out from that requirement of peer review, but I think this is the last year when it has been extended, and I think all of us who are planning to do a bank branch audit must ensure that enough documentary evidence about this performance is being carried out, is kept in a working paper file. So, identify the team member, plot it in such a fashion that each engagement team member understands what are the roles and responsibilities assigned to that individual during this 10 or 12 days jam-packed audit assignment. And that's where I think the CAQ utility will give you a good insight about what areas identified and given to the team members. Also ensure that a training which you attend as a partner or a proprietor, like today's cafe, somebody who is attending, maybe they can jot it down that these were the key considerations, key points discussed today. They can make a small note of that, and probably tomorrow or any day before the actual assignment starts, they can have a meeting or an interaction with the entire team by giving them a clear idea about what is discussed today, what is their own addition they can make it based on their experience, based on their expertise, and based on dealing with that particular bank which they are continuing to be auditors with, especially the environment, the CBS software, the controls where the gaps were identified in IFCR testing in the previous year, or based on your general knowledge about dealing with banks through a concurrent audit process, maybe which are the key areas where the gaps are identified, and all those points should be listed and they could be discussed. Also, while making such team meetings, one should ensure that a clear documentation about which team members were present, which were the key considerations which were discussed, and the entire periphery of what areas covered should be jotted down in the nature of, say, synopsis, maybe key takeaways, and then all the team members who are joining, they should be signing a document by attending this particular program. So all these discussions can be minuted either through recording through a mobile phone probably, or could be a software one can use, or maybe if all the team members are scattered and we can have a virtual meeting, then those minutes can be also saved, the recordings can be saved, and that would be a very good evidence or a document which would be for a future reference. Further, what we can do is, once this document is done, this can go as a part of working paper file, and the minutes or the summary or the records for the attendance can go for a permanent record file for following with SQC1, as well as having a minute about imparting what a proprietor or partner wants to give it to the team for this performance of this bank branch audit that can be given. So overall, the plan, the requirements of who is responsible for doing what, maybe to some extent time and date stamping of all these documents, how one should do, or could be how one should gather information, and that information can be logically linked with audit program to audit report so that a sequential numbering could be done. All those things can be minuted, and that could become a very good document for a future reference.
True, sir. Very true. And that's why we have also given one a whole working paper sheet on the initiation of this program. The tool is available on our website. Everybody can use it when the bank branch audit actually gets started. Now, the next question to Abhijit, sir. Sir, how should auditors validate the integrity of the CBS data, particularly in the areas prone to manual overrides? And what specific checks should be performed to identify and address the risk associated with the manual interventions or unauthorized changes in the system? Sir, please give a guidance on the same.
So first is the initial setting up of the limits which are there. So especially when an account, the loan has been sanctioned, the sanction letter is the key. So all the terms and conditions as to the interest rate, the moratorium, the due date of payment, what we call is a client limit master, has that been set up correctly? So once that's set up, what are the changes which are made to this data and who's authorized to make changes to this data? So there would be authorization matrix and technically the access controls and an MIS report which would give you what changes are made to data at what points of time. Now, the NPA automation is a tool which is basically run centralized. Now in the branch, who could basically amend that? Some easy cases where this is easily amended and maybe not noted is where you just keep on extending the renewal date, or you keep on extending the moratorium, or basically you have controls over the dropover which have to be fed in manually. So the dropover which is fed on basis stock statements which are given. So a lot of these things, or maybe let's say the interest rate on deposits, if that's not fed in correctly. So the stage first is at the initial origination of a transaction, the limits which are set up, who is setting up those limits, and then subsequently if there are any changes being done, if any, who is authorized to change, how is the audit trail of these changes done, and what an auditor can do is pick up some samples of changes, if any, which are done in the system, or maybe test check some interest calculations on deposits, or check any premature withdrawals, or check cases of loans which are given against these deposits to see whether the necessary interest charges are correct. So knowing what can be changed, who can change it, when it can be changed, and how it can be changed. So once, as you said, clarity, once you have the clarity, you have the confidence, and once you have the clarity and the confidence, then you have the consistency in doing it. So पहले पता तो होना चाहिए कि क्या चेंज हो सकता है. अगर मुझे पता चला कि ये चेंज हो सकता है और कौन कर सकता है, सो टेक्निकली द ऑडिट स्केप्टिसिज्म. SE 240 talks about frauds, and frauds are as common as anything you can see in anywhere. So I can say frauds happen anytime, every time, sometimes, and at all times. So one needs to be careful about that, and such things are very common. So key is to know which is the exception report, which is the MIS report to be picked up for the changes, who's authorized to authenticate those changes, and see if these are done legitimately. If you find even a few cases, obviously you need to dive in depth, and maybe that could delay the audit. But that's where, as I said, from day one, keep on updating your audit program, not just in the audit utility tool, but keep on sharing it with the branch head, and maybe from day 2 or 3, the regional head or the zonal head or the central statutory auditor, depending on how much is pending and what is the complexity of issues which you have found out. I think that needs to be escalated immediately.
Yes, very true. And these are the common things that we find in all the banks. From any bank you pick up, whether it is a private sector, nationalized, or a cooperative, these manual interventions always have a threat to the audit.
And the biggest issue is the dropover and the cases of willful default, siphoning, and diversion of funds, which technically as per RBI circular is fraud. Any manipulation of any document or fabrication of any books of accounts is fraud. So if your drop over is altered by any means which is not inconsistent with your books of accounts, the key is all cases where your audited financials as of 31st March 2025 are not tallying with the stock statements as of 31st March 2025, or some smart borrower will give a 30th March date, are pure cases of deviations which need to be looked into depth, because they are not temporary instances, which RBI says temporary deficiency. In my opinion, there is no temporary deficiency. And with the emphasis given in the 28th November circular on willful default, the fact that if the auditors are now found to be diligent, you can write to the IBA and have that in the caution list. So we are debarred from taking any audits in the future, or maybe making a case for the NFRA or the DC. I think we need to be very careful in siphoning diversion. Siphoning is any case where any security which is charged to the bank, hypothecated pledge, mortgage, secured, unsecured, is disposed of without the consent of the bank. All cases of NP accounts post that date, the stock statement just isn't available. If you go and visit the borrower's godown, the stocks will just not be there. 101% case of a siphoning of fund, 1001% case of a fraud, which unfortunately gets never reported.
Very true, sir. Now, over to Niranjan, sir, on this manual intervention and unauthorized changes in the system. Sir, we pose you to an escalation to this question. We go for, can you elaborate on the implications of the management representations for the auditors' assessment of risk, materiality, and audit conclusions in a bank branch audit? How should the branch auditor address an issue if the branch manager does not provide the management representation letter?
Sometimes it happens that, the branch avoids giving anything in writing, but nowadays a standard MRL at least is been given by the branches. But considering the requirements of SA 580, it does not restrict only on MRL, which is a composite document, but it talks about a written representation where, the responsibility on financial statement, or maybe not having complete information, or maybe not able to test enough on internal control system, or maybe as rightly said by Abhijit sir on maybe probability of having a fraud and an error of material misstatement because of the materiality and compliance expectation. I think it's worth having a written representation if you are not having enough audit population which can be tested. I'll give you an example. Say for certificates, usually a neglected area for the banks, because by and large the MIS generally throws a lot of certificates, and banker believes that all the certificates which are being prepared are absolutely true and correct. As an auditor, we have to identify whether we can do some test check, and probably we can get some hang of it, and then we can issue a reasonable assurance to that effect. Wherever such representations are not received from the management, obviously we have no choice but to go for a limited assurance on such certificates. A classic example could be a certificate on maybe agriculture subvention, where by and large MIS is one which is relied upon by the management, and as an auditor during the start audit process, it's really not possible to go without a representation. But if they don't give a representation, it's not possible to cover sufficient sample for the bank as a whole, the branch as a whole, and then we have a very limited sample based on which we have to issue a certificate. So probably in case of certificates, we can go for some kind of a limited assurance where we don't get such MRs from the branch. Another important factor is the bank branch trial balance is a very abridged one or a limited one, because in our audit report for the bank branch audit, we have got a other matter para where around 20 plus points we list already that these accounting set of transactions would be done at head office level. So lot of transactions we already write in our main audit report that they are the other matter para and it will be dealt by the head office. So what remains could be probably irrespective of a representation from the management. The standard audit program or the standard audit checklist normally covers the areas. But yes, certainly the risk related to, probability of a fraud or a material misstatement certainly needs more coverage, maybe to some extent increasing sample and to some extent, having an analytical procedure which would give an idea. Like for example, if we are not satisfied, management is not giving a MR, then a simple comparison and identifying a trend of only a few days will not be sufficient. We may go for, say, first numbers we would compare would be the previous year, 31st March, say 2025 with 31st March 26 maybe. And then probably we may add 30th June, 30th September, 31st December, and that could be one additional test we may perform in case if you are not getting sufficient written representations. Or maybe, for example, visit reports. If the register is not updated and if we are not getting in writing about what kind of structure the bank is following, it's obviously the testing is not possible. Auditor doesn't have time to visit the units. So obviously we will be left with nothing but, in case of absence of such representation, certain points can be elaborated during the audit. We may increase the sample size. We may have an alternate procedure wherever possible. But in other cases, probably we may write this fact in the main audit report if it is that material and true and fair view may be impacted and a decision probably could not be taken, or else in an appropriate form in long form audit report along with an appropriate question with respect to the area where we are not getting sufficient or appropriate evidence, that could be done. But by and large, my experience is in last 5 years at least, there has been a substantial improvement in getting a standardized MR letters at least. Also, I would request all the branch auditors to point it out to the central auditors in the last question in long form audit report and also in their communication under SS 600 to the central auditors about such process whereby the branch managers are not giving the management representation letter to the branch auditors.
Yes, sir. And sometimes, sir, I have felt that when they don't want to answer, they say that is handled at HO. We are not handling up at our level. So
I think that's the answer they give it in so many questions we pose to them. And ideally, sometimes, I have an experience whereby this typically happens in inter-branch reconciliation. Whenever you ask a question about inter-branch reconciliation to a branch, the branch would say that it's done at head office.
Head office.
And if you go and ask the head office, they would certainly say that it's done by the branch. So it's really a typical thing where, transactions are posted by branch as well as other departments. So it's done at both locations. So one has to ensure that the transactions which are responded are being correctly documented and reconciled. And the transactions which we have posted to others, that will be taken care by the other department. So yes, they have this tendency to give an answer which is very common, and we must be ready for that mitigation as well.
Yes. And you rightly said, sir, that few things we need to go for the central statutory auditors. And that's why, my next question to Abhijit, sir, sir, please help us to know that how are the observation raised by the branch auditors or MOC passed at the branch considered at the central statutory auditors level at head office? And is there any mechanism in place to ensure that the necessary actions have been taken by central statutory auditors?
So one is a central statutory auditor will have to consider the long form audit report, the qualifications in the audit report, in which include maybe the MOCs passed, if any, while considering his final audit report, because that is on record and in writing. Now, there's no way they can ignore it unless it is apparent that these entries are incorrectly passed. And obviously, if I don't have to accept it, then I have to document it because it's been signed under a UDIN by a statutory auditor. So obviously, I'll consider it unless I apparently on a prima facie basis find that it's not correct, in which case I'll have to deal with it appropriately, but it's only after I have discussions with the branch auditor and find out what it is to conclude yes or no, either way. The second case in the earlier question, what you asked is about the representations. Representations are the weakest form of evidence, and technically they would be a corroborative evidence. However, my essay 580 and in the audit report which I state that I've adhered to the standards of auditing, and if I have not got a representation, I would say so that I'd asked for representations on certain issues, and I've not got those representations, which is not in adherence with essay 580. So I'll be as clear. Again, in a lot of cases, in practice, the questions are also asked by the auditors, and the replies also what they want are in many cases drafted by the auditors itself, which is not the right way. The representation has to come from the management. The auditor should not state that this is the representation I want. So in many cases, either the branch manager would just sign what is given, or he would not sign anything at all. As is the practice, they would say that it is consistently followed at the central statutory, at the head office or at the bank. So again, with his appropriate remarks in the audit report, again in the LFAR, you could again state that, and when this comes to the central statutory auditor, again he'll make a note of it. And if this qualification is coming from many branches, or even if it comes from one branch, it's a point which he would look into, because some other branches may not have noted it. So a central statutory auditor would consider each and every item of the MOC. He will read in between the lines for a long form audit report to see what the real meaning or the spirit behind whatever is written. At times, it's just about picking up a phone and speaking with the branch auditor as to what that issue is, so that he gets greater clarity. At times, if there is something which indicates that this could be a fraud or something much deeper, at cases at a central statutory auditor, I've deep dived in depth in an issue in a particular branch and have been surprised to see the real story which unfolds at the end. So just to cut this in one way, the central statutory auditors are completely on top of whatever is written in whatever is the documentation which comes from the branch audit at their level.
Okay. So one last small query on this particular part. So can we contact the central statutory auditors of our region if something before drafting LFAR we need to get the guidance?
So it's, as I said, anytime, every time, all times, whenever you want is, you are more than welcome to call them. And I don't know why a central statutory auditor should not agree to take the call. I believe if you've called him and he's refused to do it, that should be put on record.
Okay. Great, sir.
I would like to add one more thing here is, apart from what Abhijit said about it, the MOCs, there is a tendency to pass the MOC through, long form audit report. And that is something where branch auditors should avoid. Like we come across a lot of cases where ideally the MOC should be passed, but instead of passing the actual MOC, the branch auditor moves that accounting entry, which is an adjustment entry required in the long form audit report. But I can tell you, the central auditors normally check the long form audit report before the finalization as well to identify whether anything is pushed in such fashion. So it's not only that whatever is given in MOC is verified thoroughly and they are being appropriately taken care. It's the MOCs which are implied in the nature of a transaction or a JV, which is suggested otherwise in long form audit report, is also considered by the central auditors. So branch auditor friends should remember that unless and until, as rightly said by Abhijit, that it's grossly wrong, it cannot be easily ignored by anybody, and it is being taken as a work done and work performed, and it is being accounted for in the nature of that MOC as it is.
So to add to what Niranjan said, if there is something in the long form audit report which is ideally is in the nature of an MOC, and if the central statutory auditor actually passes that MOC at the head office level, then ideally the bank branch balance sheet which has been signed by the bank branch statutory auditor is incorrect.
True. So this
Because
is
of the materiality, it may not affect the true and fair view, but they have to be very cautious about this. Because by and large, the branch managers also have a great feeling about this word called MOCs. So they believe that not having an MOC means everything is clean. Whereas some of the branch auditors also believe that if I don't give an MOC, then my audit report is clean. So it's a balance between both the things, and one must ensure that an appropriate disclosure in the nature of MOC has to be carried out.
Or there is a feeling that you at least need to pass one MOC to see that you've done something. But at times the branch may have made some genuine mistakes and corrected it through an MOC, and there is an MOC which is passed at the branch itself. So ideally, it's like the cockroach theory. Once there is one mistake, then there could be other mistakes. Like one cockroach will mean many cockroaches lurking behind. So irrespective of whatever MOCs are passed by the branch, you check whatever is right and you do whatever is right. So what people say is God you trust, the rest you audit. In God also you trust or don't trust, but everything you audit.
Yes, sir. Yes, correct.
Very true, very true.
Now, my next question to Niranjan sir again. Sir, now give us some highlight that how the auditors ensure that post-sanction monitoring, including the renewal and the review of advances, is conducted in the accordance with the bank's policies and regulation guidelines, and what action should be taken if you find out any gaps in this particular procedure. Sir, you are muted.
Ideally, your question also has an answer in it. What if there is a gap? Obviously, follow long form audit report, and all the 10 questions under review monitoring supervision, chapter 5 of advances, gives us a full idea about what is the minimum required identification points with respect to all the types of loans and advances. But before actually I give you some of the hints of that, I would like to say that for review monitoring, the most important thing, one should look at the review renewal process for advances. Generally, for working capital limits, each bank has a policy about what type of review renewal can be done. Some of the banks have got a short review concept whereby for a period of maybe shorter than a year, the same limits or maybe increase or decreased limits are being renewed. And in those cases, one must look at the circular issued by Reserve Bank of India, August 2020, which talks about, capturing correct dates for short review and renewals. Some of the banks in their MIS identify whether it's a short review or a regular review by, putting in abbreviated words like R or short or whatever. But for all the working capital limits, by and large, the general principle or the general law says that once in a year, the entire review renewal has to take place, and that limit, which is set by the bank sanction letter, has to continue for a period of 1 more year. Now, apart from working capital limits, there are such term loans. Their monitoring is also done through the review process. And each bank defines the methodology, the period, the documentation expectation for review of any type of loan or advances. So first, as a branch auditor, ask the policy about how a review monitoring supervision activity is carried out and what are the checks and balances bank has prescribed in their sanction letter, which needs to be fulfilled from the customer. What are the requirements from bank's internal policies and guidelines or SOPs for monitoring or carrying out activities for monitoring loans and advances? And obviously, the guidance note on bank audit, where a separate chapter on advances has got a sub-chapter of review monitoring supervision, where maybe small audit procedure a branch auditor may carry out for types of advances has been also prescribed. So combination of all that would be put into your audit program as a specific checklist for whatever sample you select. So long form audit report, 5th September 2020 RBI circular prescribes minimum coverage of advances at 10% of advances total or 10 crores, whichever is lower. But each auditor, depending on their experience, expertise, and their past experience with the bank, they may have a particular sample size which can be more than what is this minimum threshold recommended. And based on those accounts, we can go through the long form audit report requirements. Like the first requirement in that long form audit report is probably about the periodic review or balance confirmations. Typically, the loan documents are valid for 36 months period, and the moment they approach this 36 months, the bank has to make a review. And if the loan documents are valid for 36 months, the bank has to make a review. And if the loan documents are valid for 36 months, the bank has to make a review. And if the loan documents are valid for 36 months period, and the moment they approach this 36 months, the banker has a standard practice to obtain a balance confirmation, or LAD, we call it, letter of acknowledgement of debt. So I think the first question in long form audit report talks about such kind of basic requirements. By and large, all these questions more or less are covered in a greater extent or a scope by the concurrent auditors. But as a statutory auditor, at least whichever sample we select, I think we must look at whether the documents are valid, and if not, then what is the process followed for review, monitoring, supervision. Also, in case of working capital limits, they have a requirement for review or scrutiny of stock and book date statement. I think Abhijit said it in one of his answers about, comparison of stock statements submitted with a balance sheet of financial statements audited by the auditor, and one can easily make out what kind of a gap one identifies. I remember a couple of years back, there were some questions about how to identify it, and Caro 2020 already has a question about whether the 4 quarterly statements which are submitted by the company to the bank in case of a loan are matching with books of accounts, etc. So there are some controls and balances which one could look into for this scrutiny. Also, majority of the times I have observed that branch auditor has a query that the stock statement format or the book debt statement format is not in line with the statement prescribed by the bank, and that is something which is being picked up by the central auditors like a major gap in review, monitoring, supervision. So it's a very important tool, for the central auditors to have a view about what kind of quality of review, monitoring, supervision happening with respect to the stock and book debt statements. Also, there are external reports like stock audit report or credit report. They could be also another part of review, monitoring, supervision in case of advances. And there are gaps identified which could be reported. Also, deficiencies in value of securities, or maybe deficiency in respect of some regulatory requirements, like in case of NPA accounts above 5 crores. Once in 3 years, valuation report must be obtained in case of plant and machinery or maybe in properties, etc. Bank has to have a policy, and if there are gaps, those gaps can be reported through Chapter 5 in review, monitoring, supervision part of advances. Also, wherever there is a frequent overdrawing permitted, regular limits are being exceeded for a purpose, maybe insurance coverage is not adequate. All those points are listed into this particular fourth question. Also, it talks about red flagging and probably a period of 6 months to remove that red flag or identify that account as a fraud account. So the early warning signals, we have got 45 signals thanks to 2016 RBI circular. Each bank has now modified their requirements in the software, and a monitoring process is already in place whereby any signal which is triggered or MIS is generated and thrown to the bank, that is available. So as an auditor, probably we can select the early warning signals or a review report which is generated maybe very closer to the closing date, say 31st March or near about date. And we may probably look into that and identify if there is any lack of monitoring, and that can be appropriately reported in case of long form audit report. Also, there is a specific requirement with respect to any deficiency you observe with respect to sanctioning process, documentation process, and review monitoring process in case of a loan account. And in such top 5 loan accounts, a separate list is to be attached with respect to non-compliances or gaps observed. So that is another area where you can have a direct reporting for such gaps identified in case of review, monitoring, supervision. And in case of non-corporate entities, the bank has a liberty to decide the limit of maybe advance of 10 or 20 lakhs, and they have to submit an audit report in a given format, and that is also something where a lot of gaps are observed. So long form audit report has got a direct question where all such gaps can be reported, and similarly long form audit report, as we all know, is a very good control questionnaire. So that gives us a good input about what to audit and how to audit. So that's it from my side.
So, sir, you rightly said, and my message to the participants that in the opening message, Abhijit sir and Niranjan sir have already given us highlights that why the planning and compliance is necessary for planning a bank branch audit. And here, sir, elaborated for the advances part that so many things are covered into the questionnaire of LFAR on different subjects. And if you well plan it, then you don't miss out anything while you are reporting the LFAR. And that's our moral duty, to do the planning and then conduct the audit, because it is a high task on us when we are assigned with some public funding which is involved in the bank branch audit, right? True, sir. Now, to the Abhijit sir, I would like to pose another important and in fact a very what we say the critical question that, sir, nowadays the RBI have given the emphasis on automated NPA classification of advances. Then how the auditors ensure that the system generated NPAs are accurate, the reports which are generated are complete, and how the correctness of inputs or the account master data, drawing power, security valuations, and how this influence on the NPA classification. Also, whether test checking of NPA classification on a sample basis will suffice as a part of the audit documentation, and what are the various additional audit procedures one need to perform for better reporting under standards of auditing. So a lot of questions, lot of confusions on this topic of NPA.
So if you have clarity, then there is no confusion. One. So
True, sir.
if you don't have competency, then there is confusion. So lack of clarity, lack of competency will lead to confusion. So one needs to know what he's doing. Obviously, know what it is. If one doesn't know, if one is in doubt, seek guidance, help, support. That's one. The second is, you can't give a driving license to somebody without taking his driver's test. If you do that, then the chances of accidents will always be there if someone has been given a license without actually being qualified to do so. Now, a bad account has come in by poor credit appraisal. No amount of credit review, monitoring, supervision will stop him from going into a logical course of being a non-performing asset. So that's the basis which one should understand. Now, automation of NPAs has been mandated by RBI since long, and most of the banks are doing it. Now, what are they doing it? That one should know what is being done is the identification of an NPA. Now, identification of NPA, the RBI is very clear on what constitutes a cash credit account as an NPA, the out of order status, and the overdue status in case of a term loan, which are the major A, or if there is a bill discounting, or if there is an LC which is invoked, or a guarantee which is invoked, or a LC which is devolved. So the 90 days criteria is very clear, apart from in a CC whether there are no credits or the credits are lesser than the debit. So all those logics are fed in the system. So the identification of NPA is automated. The question is whether the provisioning is and the income reversal is. Yes, once the account is NPA, the income reversal is also automated, so that the income will not accrue from the date it's an NPA. It would be auto-linked and tested across. The question is the provisioning. At certain points of time, the provisioning is made at a consolidated level at the head office, or the provisioning is done on an overall basis, not on account basis. Now, this is where the adequacy of provisioning is something which the statutory auditor should be aware of. And the statutory auditor should also be aware of that there would be cases where the provisioning will be affected, or the asset classification will be affected by subsequent conduct. So let's say, assuming that there is a fraud in the account, then the provisioning will be either 100% immediately or 25% over the quarter. If there is an erosion in the value of security more than 50% or 90%, then it would go into a doubtful or a loss. Or maybe in a case where you would find that the borrower itself is no longer there. So it's an unsecured account and the borrower has died and there is no security, then there is no need to classify that as a substandard. One can go directly to a doubtful or a loss. So the spirit definitions of the substandard account is something where there is a weakness, and if that weakness is not addressed, there would be a loss cost to the bank. A doubtful is something where the recovery is questionable or there is a challenge. A loss asset is something where it is uncollectible. So if by an conduct of the account, by the way it is operated, or by the way it has panned out, If it falls in any higher category, then obviously one needs to make the provisions accordingly. Again, valuations, if valuations are not done, valuations are not realistically done, valuations seem inflated, again the valuation would change and the provisioning would change. So while the asset identification is automated, most of the banks will not have any issues as to that. The income reversal would be perfect. The provisioning is something which the auditor needs to do. Again, there are some areas where the classification is done based on the reports of the stock auditor, or maybe in RBI's case where there is a recovery at the year end. If that recovery is at year end and if it's not from a genuine source, or if there are cases of window dressing or evergreening by which you have upgraded that account as an NPA, so you will have to maybe reverse that and classify it as NPA. So manual intervention is a part and parcel of this game, and the auditor should be aware of the fact that this is very much a real life scenario which can happen. So he'll have to look at all these cases which are there, and then make his judgment based on the facts, circumstances, and evidence which he has in front of him, and take a call. So these are cases where there would be changes. A stock auditor may say that the stock itself is not there. There is a huge amount of impaired stocks, or there is a deterioration in the value of stocks because of damage or whatever. The point is, the stock needs to be impaired. If the stock value is coming down, the drop over will come down. Again, that would be an NP. The point is, I have given a borrower a sanction limit of, let's say, 1 crore of rupees, and his balance is 99,99,999.99 paise, and that account is in order just for 1 day by 1 or 2 paise. Again, in spirit, I need to see whether that account is really an NPA. If there is no turnover in the account, which doesn't justify the limit, there is no debt equity ratio, there is no current ratio, there is absolutely no turnover in the account, just the credit which is taking care of the interest. I think these are cases where manually the auditor needs to use his experience, his expertise, his judgment, his skepticism to classify the account correctly as an NPA or not.
Yes, you are right, sir. Like manual interventions for NPA, previously we discussed. So one of the reasons is that also for classification of NPA. Now, taking this question more forward, we move to Niranjan, sir. Are there any specific internal controls such as alerts or red flags established by the bank for the prevention or early identification of potential NPAs, as well as controls for the effective management of existing NPAs? How should auditors evaluate these controls and report any deficiencies identified? Over to you, Niranjan, sir.
Based on the requirements of system-based asset classifications in the year 2021, I think the bank has established a lot of internal controls, checks and balances, and obviously use of intermediary software probably, or improvement in the CBS software to generate red flags or generate early warning signals towards account becoming a potential NPA account. Obviously, there are so many RBI circulars which have done a build-up towards reaching to this goal of identifying accounts and declaring accounts as NPA on a daily basis. So it's obvious that a huge, greater extent use of computer software is being done. Similarly, for reporting also, similar questions are posed in the revised LFR 2020 under the advances. There is a separate section where some questions on IRAC norms are being drafted, and those questions gives us a fair idea about what's happening in banks to do that. So to start with, I can say that early in 2002, the SMA concept was suggested by RBI, and then subsequently they have improvised it to a greater extent. And now all the banks have got a system of identifying a stress account by identifying how much overdue portion they have. So 0 to 1, 1 to 2, and then NPA. That's a process. So account where an overdue is between 0 to 30 days would be SMA 1, then SMA 2, 31 to 60 days, and 61 days to 90 days, it would be SMA 2 account in case of by and large loan account, which is not a working capital. And for working capital, they have identified two SMAs, 1 and 2, whereby 30 to 60 days and 60 to 90 days are identified. So that's, I think, one of the major identifier for a potential NPA. And as a statutory auditor, we also must ensure that our team is aware of such reports, and we must obtain such reports from the branch, generally in their MIS folder or their report folder. We get this, and based on that, we can select some sample where we can probably look for these potential NPAs. Also, there is a question related to this about how the computer system does it without manual intervention and all. So that also could be answered well. Also, bank should look at, how the auditors are looking at the processes, and auditor should also look at how the bank makes that process of identifying this red alert or a red flag for a potential NPA and its movement from either SMA 2 to SMA 0 back to normal, or from SMA 2 to an NPA account, which is a substandard account, can be monitored through a simple process of maybe reconciliation of NPA. So opening balance of NPA plus additions during the year, less upgrades during the year. So those accounts which got removed from NPA would give us the outstanding as on 31st March. And based on such reports which are SMA, etc., or the alerts, auditor can look for whether any alert in the month of March, but that account is not identified as NPA, then probably that sample can be selected and the account statement can be verified for the transactions in that account. And as rightly pointed out by Abhijit, the year-end transaction should be a genuine transaction that can be also vouched. Also, the NPA management in banks has a focus area for banks for a long time. The early 2020s, prior to the pandemic, I think the numbers have grown like anything. But if you see the last 5 years trend in almost all banks, the number of NPAs and the amount of NPAs is substantially under control because of this daily mechanism, daily marking of NPAs. So as a result, auditor also has got more reports with respect to NPAs, not only on the reporting dates, but nowadays on a daily basis, some of the account becomes NPA, some of the other account is coming out of NPA because of a recovery of substantial portion or recovery of that entire overdue portion. So auditor should pick up dates, maybe sample dates to check which were the accounts classified as NPA. Also look for movement of NPAs wherein there were slippages during the year and upgrades during the year, and pick up such samples and do a testing. Obviously, long form audit report is the only place where all these questions are drafted, which we have discussed right now, and all that can be reported under the LFAR where such list of accounts could be given. Also, the entire master circulars or master directions, nowadays they call it, the 2811 master direction on IRAC norms also is a very good guide whereby one can plan for this. So I think enough tools are available, enough information is available, and enough questions are being posed in long form audit report where any such deficiencies identified by the branch auditor can be reported.
Right, sir. And so participants can view our websites for the various tools and guidelines available all the time for the upgradation of the knowledge with the latest circulars. And also we have released the guidance, updated version of our guidance note on Bank Branch Audit 2026, which is available on the website for the reference. Now, next question to Abhijit, sir. Sir, as a branch auditor, also required to report on IFCR. However, many times the branch manager or officials are not aware of the requirements of such verifications, like risk control matrix. How an auditor required to report upon such circumstances? Further, many such times, controls are also not applicable to branches. Abhijit, sir, please give a view on this particular question.
So while the internal controls over financial reporting will be issued by the bank as a whole, and the RCM will be compiled at the bank level and also will be tested by the central statutory auditors at the bank level, there is something at the branch level. If a ICFR at the branch level has to be issued, which I would say an absolute no. And there are cases where I've qualified this ICFR despite the branch manager's serious objection. But it's finally my report, so I can do whatever I want with it, because that's, in my opinion, the only Brahmastra I have as far as my work is concerned. So one is something which I never understood, maybe since I was a student, and it date backs to about 40 years, is the suspense account. I never understood why an account should be termed as suspense. I feel this word is completely out of place and should be banned. Actually, there should be no such suspense account. The moment I see something called a suspense account, I think it's a weakness in the ICOFR formula. Firstly, if I see old outstanding entries lying in sundry deposits, assets, liabilities, again, which are not reconciled, it is some follow-up weakness. And it finally, when it boils down to a reporting issue, because that's what gets captured. So any of these items which are there, according to me, they are weaknesses which need, either depending on the volume, that it's an absolute weakness which needs to be qualified as a gap, or which needs to be given as a recommendation that it needs to be strengthened. So, but I would not go by the RCM at the branch. I would go about the branch issues. And a lot of times the fixed assets, the depreciation takes place not when the asset is bought or when the asset is put to use. It's depreciated from the day when the final payment is made. So that again is not right. The final payment may be made 6 months down the line after the asset has actually been put to use. So there have been assets which have actually put to use in a year earlier and are depreciated from the current year. So again, in my cases, because there is no accounting control over what needs to be posted when, I think these issues are there. So this is what should be highlighted in internal controls over financial reporting, either as depending on how pervasive they are, either that it's a qualification or it's a suggestion. Simple. And maybe most of the branches would have this.
Yes. And for auditor also, sir, this is one of the important tasks. You know, your whole bank audit has to be reviewed when you are filing these reports on IFCR. So it's a task even for the branch managers.
So I feel one of the most important skills for an auditor, apart from the competency, is that he should overcome his shyness to qualify. He should have the courage to call a spade a spade. And I think that's what needs to be distilled in him. And in any case where he has a doubt, obviously he can just call up anybody for help. Maybe if someone is here, they could just call us up anytime, and maybe we could give our inputs or two bits or whatever it is on the issue.
So that's why,
and Bhavi, here I would like to add to what Abhijit said, is because if the qualification is not there, then the auditor must also ensure that there is sufficient document available to demonstrate the performance of how the auditor has tested these controls, because till now it was the self-regulatory mechanism whereby we were declaring that we were maintaining all the sufficient documents. But since the peer review process is on the cards, and any time after the audit process is completed, we'll have to get the peer review done for our processes and our documents. I think if we are not qualifying it, then there should be sufficient document to establish that this particular questionnaire was available, we did test it, our team was qualified enough, and sufficient record is available for testing of that. So that is something which we need to add this time more particularly.
Yes, sir. And as Abhijit sir said that auditors should be confident enough, we would just like to add one line to it that Institute of Chartered Accountants, ICAI, has already initiated one helpline which starts from 1st of April, where all the branch auditors are already starting up with their work. And on particular questions, if they have any specific queries where they are confused that how they can move, they can take the expert advice from the panelist of ICAI who are having a good knowledge and expertise on the various subjects of bank branch audit. And they can post the questions and they can get the reply on emails. They can use these helplines which are active from 1st of April. So even the participants can have a knowledge that ICAI is working on many of the efforts so that the quality of the bank branch audit is maintained. And we can produce with the good knowledge the reports, and our reports are very quantitative enough to give enough knowledge about what the work has been undertaken by our auditors. The next question to Niranjan sir. Sir, we are now moving a bit apart from a topic that we are regularly discussing. I will take you to the context of foreign exchange operations. Sir, how should auditors assess the bank compliance with regulatory guidelines, including exposure limits, revaluation processes, and monitorings of overdue export bills? What role does the auditor play in identifying and addressing the operational risk in Forex transactions? You know, sir, this is a burning issue right now with the HDFC Bank, and that's why this question to you, sir.
Ideally, I would like to just give a take on what's the minimum thing one can do. Number one is like applying the entire FEMA law and understanding would be not possible in 10 days. So I would just recommend that go through the guidance note on bank audit, and there is enough material available. But as an auditor, one should look at whether it's a AD branch of what category, what kind of operations, make a brief list of what kind of foreign transactions one does. And based on this specific query on export bills, I think Bhavi, you are aware that RBI has already permitted certain sectors, especially in the situation which is globally currently, the extension for period, and on case-to-case basis, there has been an extension provided since the COVID period for exports which are affected. Same kind of extension has been granted. So as an auditor, what they have to do separately this time is to look for this sectors which are affected because of the current situation world over, and to that extent the monitoring of overdue bills would be a bit tricky, because if there are sectors which are affecting this particular current situation in the east side of India, obviously there would be some gap and there would be overdue which is extended beyond the statutory period, and one may have to go for a case-to-case approval. However, in general, a standardized questionnaire would be sufficient at a branch level. The transactions where primarily one has to look at, whether the export bills are realized truly from the same customer which the bill was. And I think there are enough reports which are generated through the MIS which would be made available to identify the gaps. However, the word which is very synonymous with such kind of transaction is evergreening, yes, or maybe teaming and ladding. And to some extent, one must ensure that a sample has to be selected for all such transactions in such accounts. And on those dates, one must look for what kind of remittances are received and are they matching with those. Beyond that, I think this time there would be an additional risk with respect to the accounts which would attract higher risk because of a delay, or maybe in some accounts because of gross uncertainty in the recovery of export bills. And to that extent, one must look and ensure that enough documentation with respect to the ECGC, the filing of claims at right time, and following up or review monitoring for the claims or the overall transaction is being looked at. So I think to that extent, those who get an AD branch must do a proper plan and ensure that your team is enough knowledgeable about the FEMA requirements with respect to such and also the recent regulatory updates on export bills.
Yes. So participants are advised to follow the circulars issued post 15th of March, specifically to see that the statutory bank branch audit covers all these aspects. Thank you, sir. And extending this question to Abhijit, sir. Sir, can you please give us an highlight on the key risk associated with the derivative transactions in treasury operations of the banks? Sir, only few auditors are given branches related to treasury operations, and that's why please help us in identifying how the validity of this internal controls, risk management, compliance goes ahead.
So first is, I think very few bank branch auditors would be given foreign exchange branches. The only foreign exchange branches where they would have is there is a separate LFAR questionnaire in that context, and the main issue will be there is the FCNRB or the NRE accounts which would be there, the operations in such account, and obviously there will be a policy in the branch of dealing with such accounts. So one needs to look into the policy and see how those operations in such accounts are made. As far as foreign exchange is concerned, also there is something called a IDPMS and a EDPMS monitoring system. So it's import data processing monitoring system for imports, export data processing monitoring system for an export, where all overdue bills, import bills which have not been paid over a particular period, export bills especially, which RBI is very particular because there's a loss of precious foreign exchange there. So there's a policy for write off. There is a policy where you write to RBI, take permission and write those bills off. So that is something which is monitored, and this is what the auditors should be aware of, and they should check whether there are such bills outstanding in the branch and what is actually being done to actually write this off or recover those amounts. So that's one part of this. The second is, in any bank where there is foreign exchange, obviously this will be at the head office or designated treasury branches, or there'll be a treasury branch itself where either there'll be a domestic treasury and a foreign treasury. Then when you come to a foreign treasury, the bank will itself have accounts with various foreign banks. We call it nostro accounts. So the nostro account balances, the reconciliations, are there overdraft in those nostro accounts. There'll be cash balances. So what are the overnight limits, daylight limits? So there'll be various limit monitorings which would be there. There would be same like there'll be a concurrent audit of these FX transactions. So are there the concurrent auditors there highlighting any issues which maybe the branch auditors, or if they have, or mostly the central statutory auditors would be allotted those branches, they can check. Then when you come to the derivatives transaction, there'll be a simple forward contract. The forward contract could again be revalued at the year end using the FEDI rates. The forward contracts could be amended. There could be something where there would be an early delivery of the foreign forward contract, or there could be an extension of the forward contract. Again, apart from the forward contract, there would be options and there would be swaps. There would be interest rate swaps. There will be currency swaps. There could be cross currency swaps. So there could be various complex ways in which those swap transactions will take place. Again, the valuation methods are quite complex. That's why these there are models which are there. There are specific within a particular audit firm. There would be only some specific people who would be experienced to do that. So all in all, a specialized activity. I don't think any branch auditor would be given this. If it's done, it would be allotted and allocated to the central statutory auditor. So we could speak at that in that session in depth. But there is another thing which is also important, is at a common level, is remittances. So remittances is one area where there can be money laundering. And we talked a lot about advances. Money laundering in operations, especially deposit accounts, and RBI is very sensitive to the use of money mules and beneficial owners, the shell companies, the ghost companies, the phantom companies which are set up and they just vanish, laundering the money as first placing it, then layering it, and then integrating it with the rest of the economy. So remittances, whether the remittances in foreign exchange which are made, so the money is actually going out, you have to issue the necessary A1, A2 forms. There are certifications from chartered accountants involved. There has to be a certification on the tax deduction at source, whether that's right, whether it's going for the right purpose. It's not a dummy transfer, like it's not a hawala transaction is one needs to see in such cases. So all in all, FX is not purely derivatives. It's also about remittances. It's also about your foreign exchange credit, which is post-shipment packing credit or packing credit in foreign currency pre and post. It's all about those NRE, NRO, FCNRB, all such accounts. It's also about that IDPMS, EDPMS, and it's when you come to derivatives, it's those complex swap and option transactions, as well as normal vanilla forward contracts. Again, there will be export LCs issued, export guarantees issued, or import LCs, import guarantees. So guarantees and LCs in foreign currency. So everything where the currency is not INR, it's some other currency, will be a part of the FX transactions, and there could be multiple of it at various points of time at various branches.
So that's a very difficult and a different chapter. You know, it's like you have to deal with it very cautiously.
It's not difficult. It's simple when one knows of it. It's all in the mind that I've not done it. It's something complex. The swaps are, the options are as simple as the options we do when we trade on the stock market. And I believe every chartered accountant would be doing that. So yes. Futures, options, derivatives is not new to any chartered accountant.
Yes, sir. Very true. Taking this forward to Niranjan, sir, one question regarding the internal control and compliances. Sir, what are the key internal controls auditors should assess to ensure that the branch has a robust framework for GST compliance, including timely filing of returns, accurate tax compliances, ITC validations? Sir, some on the lighter note on GST part.
I think this is the simplest of the questions amongst the questions I've answered, because by and large most of the nationalized banks are centralized, so it's done at a centralized level. Only thing, as an auditor, we must ask at the start of the audit about the requirements with respect to compliance with GST law, and it can start with identifying whether it's centralized or not, what are the processes which are centralized, how the identification of data is. And most importantly, what they should do is they should select certain items of input credit which is available, and based on that, whether they are correctly putting it in a right account head at the branch level. Like there are certain input credits which are available, and if the branch doesn't record it in a proper software or a process center at the branch, then even the centralized team may not get the correct information. So I think to that extent, some sample selection by the auditors is good enough to go for it. Also, this is an area which is primarily covered by the verification by the concurrent auditors on a monthly basis. So maybe we can take an input from that and also satisfy ourselves. So this is something which is very, very basic. Control testing is sufficient, and if at all they feel, maybe some transaction testing also could be done.
Okay. And over to Abhijit, sir. Sir, the specific factors that auditors should consider while evaluating provisions made for the pending legal cases or disputes. How can auditors verify the reasonableness of the management estimates in such cases?
So first is whether all legal cases are actually brought to the notice of the central statutory auditor or the branch auditor. One is identifying whether all such cases are known. Then exactly what is the current status, because you may not know what is the last hearing which has happened, when it has happened, and whether it has been updated. Now the question is, on what basis are you deciding whether this is a contingent liability or you need to make a provision? AS 29 very clearly talks of what is a contingent liability and when that contingent liability can actually turn into a liability which needs provisioning. So one is the auditor an expert in deciding whether there could be an provision needed or not? So there could be two such cases. One would be tax disputes. The tax disputes would just not be at the branch level, they would be at the central level. Again, if there are disputes at the branch level, considering any litigation, I believe there's a centralized legal department which would be handling that. So again, in your format of the bank branch audit, contingent liabilities, the provisionings are all taken care at the head office. The question is whether the contingent liabilities are booked at the branch or the contingent liabilities are booked at the central office. That only needs to be clarified. If they are not booked at the branch, if they are booked centrally, then the central statutory auditors need to be very clearly told that, or maybe in the format of the audit report itself, it's very clear that these are not considered here, they are considered at the central office level. So the clarity has to be there. Now the question is, at a central statutory auditor level, I would involve an expert, possibly a lawyer a legal expert in my team, to basically take a call whether that amount would realistically devolve into a liability. So whether there is a probability that there would be a cash flow. So the exact word of the AS 29, I would look into what would happen to that case before I make a call. And finally, it's a matter of an auditor's judgment. So I will rely on my instincts, I will rely on my judgment after knowing what are the observable facts, evidences which would go. I would take a look at the report of the auditee's expert, but it is just that I would take it at a face value. I would not be bound by it to rely on it in any case. I will use my own discretion.
True, sir. It is so wonderful talking to both of the panelists, gaining so much of knowledge, but we are sorry we are running short of time. So I would like to ask a last question to Niranjan, sir. Sir, please highlight us how to prepare engagement team before starting the bank branch audit in few tips.
Number one, SQC1, nothing else. Right now, that gives you a clear indication about your team should have experience, expertise efficiency, qualification, and ensure that, you define the leadership responsibilities amongst your team. There are so many individuals who get this bank branch audit. They are the only ones who are qualified. Some other non-qualified people also join their team, but they should ensure that based on this experience, expertise, and efficiency, apart from qualification, they can identify the leadership responsibilities and give them the job to be done, either of doing the work or reviewing of the work. So that would be the overall supervision. Ensure that proper training is given to the team, given enough tools, and where our CAQ helps them a lot by giving an extraordinary tool which will certainly improve the efficiency and quality of work. Also ensure that the senior team member follows this so that a monitoring is also being done continuously, and ensure that all this leads to not only the reporting requirements which we have accepted, but it goes to the effective reporting. So the entire effort should be planned in such fashion that the coverage is as per the scope of work which we have accepted. The minimum threshold requirements as suggested by ICI various standards is fulfilled, and one must ensure that the quality of work, the word quality which is there in our CAQ also, is something which is at the forefront of everything, and we must ensure that the responsibility of giving a report on true and fair view is taken based on all this material by documenting it enough to prove it to somebody who comes in and tests it. So I think that's my take on how we should plan the team.
Great, sir. And the last thing that we would like to get from Abhijit, sir, is what is the strategy that you would recommend for effectively completing the bank branch audit in time?
See, at times you have no choice. The branch manager has decided that he will go out on a particular day on a vacation or a marriage, and the tickets are already booked. So on that day, he won't be there. So he will not sign. So you have to sign before that day. I think the first thing is be very clear with him and ask him what is his plan rather than your plan. Yes. Because the point is then you will have to adjust. It's basically, it's not a T20 match. It's a 6-day rain curtail T20 match. So day 1, day 2, day 3, day 4, day 5, day 6, whatever I need to do, the LFAR, the certifications and the signing of the main audit report, I need to plan it very clearly. I should start firing on all cylinders from day 1, from the first ball itself. We need to just be all the Abhishek Sharmas and the Ishan Kishans in your team and just escalate. I think escalation is key. If on day 2 you're not getting the data, you feel that you will have to give disclaimers that data is not available. The region. So from day 1 and day 2, the branch head is the one who will be addressed in the mail. On day 3, if I see 50% or plus of the data is not there, then my mails will go to the regional head and the zonal head with the branch head in CC. I will again on day 4, if the data is not there, I'll keep the central audit, statutory auditor in CC. So I'll do all my documentation to ensure that if I need to qualify in case of a disclaimer of not having got all the information and explanation which to the best of my knowledge and belief were necessary for the purposes of my audit, I'll qualify. I'll qualify both the main audit report and qualify the LFAR suitably. Simple strategy is just don't be shy of qualifying. Be courageous enough to call a spade, but before that, be, as you said, I'm putting your words, be clear, be confident, be consistent, and that clarity, consistency, and confidence will only come with competency. And for that competency, we need to do a lot of homework. I think as the Indian team which wins is because of they have a good coach, they have all the support staff. I think what is needed is you have a good team which is doing the audit, which is a balance of your batsmen, bowlers, the all-rounders, the fielders, the strategists. So in your team, whether the enough representation of IT skilled people, of old school thought bankers, of people who are well versed in the FX areas, people who are well versed in the advances, people who do the general banking. So it's all a teamwork. It's simply we're not living, as I always say, we're not living in an era of competition with each other. It's all about cooperating, to collaborate, to co-create, to co-elevate each other. And it's basically the institute, the healthcare centers, which they do the mail facilities. The only issue I have is the people who come with queries, they just don't write the problem good enough. So it's all about, I think, in the world of AI where prompt engineering prevails, I think it's the right question. If you ask the right question to even the so-called experts or whatever the experienced people who are there in the groups to help, I think then the support or the guidance will be clear. At times you get a lot of half-baked questions, which is just, it confuses the panelist more, and he may not be able to do real justice. Even if he asks a couple of times, I think still he's not here. So even the answer which is given to the querist is a sort of a disclaimer or in a qualified form. So be as consistent and specific and clear as possible.
Right, sir. You really gave a good insight, planning before planning. So before we start our planning, as how Niranjan sir was speaking, we have to plan for the branch manager's whole program. And our teamwork will definitely give results for the bank branch audit. So I am really thankful to both the panelists. We had a very good discussion, and the important thing is we spent 2 hours discussing the matters, and still many questions are yet unanswered. But as the time flies, we need to conclude at certain point of time. So it was nice being moderating the session. It was so much enlightened for me personally, talking to both of the panelists. Over to you, Nidhi ma'am.
Thank you, Bhavi. Thank you, Niranjan sir and Abhijit sir, for the wonderful session and answering the questions so nicely. So really thankful for sparing your valuable time for our Quality Cafe session, and also the participants for the patient hearing. And thank you, sir. Thank you, sir.
Thank you.
Yeah.
Thank you, Nidhi ma'am. Thank you.
Thank you.
Thank you.
It was a pleasure.